Alright, as you can see, just an empty chart, and I will be analyzing this from start until how I managed to spot those trades. So right now, I'll be zooming in so that I can identify the overall market structure. Alright, by the use of the eyes, we can see that we are in a downtrend, but now let me just mark for the sake of the beginners. Alright, we can clearly see here price took out this valid pullback upon retracing. It was currently forming pullbacks to the downside. You can clearly see that this here is a valid pullback, another valid pullback, another valid pullback, and then price took out this. In fact, it took out all these highs. I mean the liquidity resting above these highs, but we only consider this, or this is the only that matters. I mean the major inducement or a minor inducement, but in this case it's a major inducement. All right, so price went forward taking out additional buy side liquidity and then retraced back and broke past our swing point. We all know that once price has taken out the inducement, now this one here, I mean this one here is a confirmed swing point, and you can clearly see price reversed back or retraced back, took out the buy side liquidity, and then came back after taking out the buy side liquidity. The first buy side liquidity is obviously the inducement, and once it's taken, this is already confirmed as a swing point. And now price retraced, did its thing, and then reversed back, and you can clearly see it made that valid break of structure in this trading range, which ranges, I mean in the range, this one here, which ranges from that high, I don't know from which low, but right here you can clearly see that this here is the minor inducement. The minor inducement because it happened before the break of structure. So you can clearly see price broke the structure and then reversed and took out the minor inducement and then broke again. You can see upon retracing and taking out the minor inducement, it reversed back. So what does this mean? We say that upon price reversing and taking out the minor inducement, this one here is a confirmed swing point, and if price now reverses and breaks past our swing point, then this one here is a confirmed high. I mean, since we are bearish. All right, now you can see we are actually getting out to the current trading range right here. All right, so is this one here a valid break of structure? Let's see. We say that we only identify a valid break of structure upon taking out a major inducement or a minor inducement, but in this case no inducement was taken out, so this means that this one here is not a valid break of structure. And right here I can clearly see that all right, let me zoom in here. There is some situation that I need to showcase right here. You can clearly see that this is the low, and right here, so you can see that this pullback, I mean this pullback high of this pullback is a minor, like it's inside this order flow. I mean all this buying momentum, you can see this pullback is inside, so this means this one here is not the correct inducement, rather the correct inducement is this high. So this high here, the liquidity resting above this high, is what we'll be using as the inducement. All right, and is it a major inducement or a minor inducement? By now I believe you know how to differentiate between a minor and a major inducement. That's a major inducement because it occurred after the bearish break of structure. Right, so, and like I said also, I created a video showcasing that both the minor inducement and the major inducement do work, but the most important thing is that the minor inducement is more impactful than the major inducement. All right, we can clearly see that price has taken out the major inducement, and we said once the inducement is taken out, now that's the perfect moment or the right moment to mark the POIs. And we said the order flows are primary. Right, so starting from the extreme of our trading range, I can clearly see this is the buying momentum before the sell, and we can clearly see also that price has already mitigated that. So shifting to the next right here, I can see this is the next buying momentum before the sell, and it's also mitigated right here. You can clearly see that this one here is a valid pullback, and we said a mitigation by a valid pullback is a valid mitigation. So this here is the other order flow. So right now this here is the unmitigated order flow, and this here is the extreme order flow. So this here is our POI, and in this trading range there is no any decision order flow. It's just a major inducement and the extreme order flow. All right, but we said if the extreme order flow is not on the extreme of the trading range, you can see these order flows, especially the first that is on the extreme of the trading range is already mitigated. The following is also mitigated. Again, now the third one, that is, you can see it's actually nearly the equilibrium of the trading range. So we said once you see this, you can actually mark the order block that is on the extreme of the trading range, that is unmitigated, and that order block will be valid if the order flow fails. And you can clearly see here, upon mitigation, it gave a good bearish reaction, but then later violated that. And right now, I'll now be looking forward for that order block that is on the extreme of the trading range. I mean, the extreme order block, and it shouldn't be mitigated. All right, so where is that order block? All right, starting from the extreme of our trading range, I can clearly see that this extreme order block has no any candle, single candle that is associated with the fair value gap. Coming up to this one here, all right, is this candle associated with a fair value gap? All right, it's not associated with a fair value gap. You can see right here, this candle is not associated with a fair value gap. All right, let's see, is this a valid pullback? No, this is not a valid pullback. You can clearly see that this thing here, it's actually inside this candle, the one that I'm actually marking with these lines. You can see that this here is happening inside. And even though, let's say this here was a valid, a valid pullback, let's say now something like that, and that's a valid pullback, I will still not count this candle to be a valid one. Why? Because you can see this pullback came in and mitigated this order block. All right, so this means now our trading range using the 1 hour time frame, because we are currently on the 1 hour time frame, it's not giving the extreme order blocks. All right now, since there is no any order blocks that are available in these order flows, I'll be using an unmitigated wick, because those wicks hide lower time frame POIs. So in this case, if I start from this range, I can only see this rejection block. So I'll trash the rejection block first, and let me get here. I cannot see any unmitigated wick. All right, this one here on the next order flow, I can clearly see this candle, this long wick is not mitigated. All right, coming up to this next candle. All right, this one here is not a this candle. You can clearly see that this candle is inside this, so I will not be using this. We said we don't use insider bars as POIs. So right now I only have this wick as a hidden POI. Why a hidden POI? Why I'm using this wick as the POI or as the extreme order block? I'll be using this as the extreme order block because when I shift to a lower time frame, and since this here is a 1 hour time frame, I'll be shifting to the 15-minute, so that we can see that there is a hidden POI right here from this long unmitigated wick. Right, so on the 15-minute, you can clearly see right here that this one here is a valid order block. Alright, so I'll just refine it to this one here, because this one here is the one that is associated with a fair value gap, but there is no harm extending it to the top there and just making it two candles. The reason as to why I'm actually using those two candles is because you can clearly see that this here is the fair value gap right there onto the top left here. I'm actually showcasing here. So you can clearly see that that's a valid POI on the 15-minute, but on the 1 hour, it's actually just a wick. And that's the reason as to why we actually use the wicks. All right, so let me get rid of these red lines. All right, now getting back to the 1 hour, I believe you've understood what I was actually showcasing. Now getting back to the 1 hour, since this order flow has failed, I mean our extreme order flow has failed, I'll be looking forward for reversal upon mitigation of this hidden POI. Alright, and since this one here is the extreme POI, like there is no any other POI above this, then I just placed a sell limit order exactly here, like exactly on the start of the POI, and my A sell, I mean my stop loss, exactly at the external liquidity, I mean on our trading range high, and TP obviously at the external liquidity that is aligning with our prevailing trend, and I got a risk to reward of 1:5, as you can see right here. Right, so right now I just placed that, but just see where my stop loss is. I placed it at a safer place, meaning if I got stopped out, then the whole trade becomes invalid, because now price would have changed bias from being bearish to bullish. All right, so now let me just run the price, and you can clearly see right there price mitigated the zone very perfectly, exactly right there with a wick, and gave that reversal pattern that we call the evening star pattern, showcasing a strong reversal to the downside. So let's say you didn't place a sell limit order. Now your entry would have been from this candle, then stop loss above that high, and you'll be targeting the same place as mine right there. But your risk to reward will be lesser than mine, because I had a 1:5 and you'll be having a 1:3. So for me, it was worth it to do this, because my stop loss was safe, and at the same time I was securing a good risk to reward. So for me, it was like, why not? And I ended up placing the sell limit order, and here price is actually heading into my direction, as you can clearly see right there. And right here, upon price doing that, you can clearly see price created a valid pullback here. We all know how a valid pullback is formed. You can clearly see price created a valid pullback, and I knew automatically that this one here was a valid break of structure on the lower time frame. And since this one here is the 1 hour time frame, then upon shifting to the 5-minute time frame, this one here will be a break of structure. I mean a valid break of structure. And we can confirm that because I shifted down to the 5-minute, and right here we can clearly see that we all know how to identify a swing point and a trading range. So right here we can clearly see that price took out this major inducement. I mean, you can clearly see this one here is a valid pullback, and in this case is a major inducement. Price also took out this additional buy side liquidity. So we said upon seeing that this one here is already a confirmed swing point, and if price reverses and breaks past it, that's a valid break of structure. And you can clearly see right here price did that. So this one here is our high, exactly right here. So we have this one here is our high. And by the way, this here was just a simple valid pullback on the 1 hour, but upon shifting to the 5-minute, you can clearly see it's a whole structure, like a whole valid structure. Alright, so right now, this is how I took their entry. For those who are asking, like, how did I took their entry? This is how I took their entry. Alright, let me just get rid of this tool. It's actually disturbing me there. I can't even move my chart. All right, getting into the 5 minutes, exactly right here. Now you can clearly see this one. All right, this is the structure. So let's see what price does. Where is the minor inducement? Currently, the inducement is here. I can't see there is no like a major inducement. So let's wait for price to, all right, and we can clearly see that price created that here. You can see price broke here by a week, and this is a valid pullback, and it is formed after the bearish break of structure. So this one here is our major inducement, exactly right there. So after price now grabs this, then we'll be looking forward to mark the POIs. Right, and you can clearly see price is heading up, and exactly right there you can see price did that. This one now is a confirmed low, and this is the right moment to mark the POIs. Starting from the extreme, this here was the order flow, and it's already mitigated. Coming up to the next order flow, already mitigated, and the extreme order flow in this case is this one here. So this one here is our extreme order flow. So price will either be reacting from this extreme order flow, or, and by the way, this one here is our engineering liquidity. Why our engineering liquidity? Because it is the pullback. I mean, the liquidity resting above this pullback high is what we call the engineering liquidity. And this here is the pullback that is right before the extreme PY. And the extreme PY in this case is an order flow. If I were to take, like, if I were to mark the extreme order block, because this order flow is not on the extreme, then will I pick this? No, I wouldn't pick this. It's not associated, it's not associated with a fair value gap. So I will be picking this one here. So if if this order flow fails, then I'll be looking forward to take the entry from there. And for me, I did this. I took my sell limit order exactly right there. Stop loss, I place it above the high, and my TP, of course, on the 1 hour. The reason as to why I did this is because if I had to do this, you can clearly see if I had to do this, because for me, for the lower time frame entries, I usually like to place sell limit orders because I think it's easier to execute with sell limit orders than executing just directly based off reversal patterns on the lower time frame. So that's the reason as to why I just find it like if I do this, I will have a bigger stop. I will have a bigger stop loss, and I want something that will provide me or will give me good risk to reward. So I said this one is the extreme PY. There is some chances that price also may fail the extreme order flow, even though the extreme order flow is valid. So I said, right, I will take my entry from here, stop loss above the high, just to make sure that I'm like heavily secured. And obviously this one here is the low. So let's say if price breaks past this, now I can take my SL to above this high, or maybe here, or maybe on break even. But right now, let it be just where it was. And obviously the target profit, it will be our 1 hour external liquidity. Our 1 hour external liquidity. So right here, and you can see that is another 1:5 risk to reward trade. All right, for that time I just place it to 5:5. I don't have something like that. So you can see that's the second trade that I took. All right, the first trade, it was here, and it was stop loss, it was now above this high. Stop loss, it was above here exactly at that high. And target profit, of course, the 1 hour external liquidity right here. And yeah, that was the first trade, and this one here is now the second trade. So let's see how price plays out on this trade. Right, so let me pick a 1 hour candle. Right, you can see price reacted from our extreme order flow, gave a reaction, and it's now heading up. So let's see if price ends up mitigating our zone, and you can clearly see price mitigated our zone and broke the structure to the downside. And you can clearly see our external liquidity is right here. So this means we still have room to take the re-entries. And so I was like, yeah, let me get back to the 5 minute for some more re-entries. All right, so right here you can clearly see this here was the structure. And where was the entry? Exactly here. Price mitigated the extreme, showcased this, and let's say I just placed my, because I would wait for this reaction and I would have placed my whatever there. You can see I would have been stopped out the first time, and maybe that's the first time I would have been stopped out. All right, let's say now I waited here and took it here upon seeing this reaction, and obviously my stop loss above right here, I will still be stopped out. So it wouldn't be making sense for me to just do that, because even though, let's say I was just waiting for the reaction, then I will need to do that and stop loss above here. So this one here, you see like the stop loss pips are larger than me just placing a stop, like a sell limit order. So that's what I always pick, a sell limit order rather than a reaction from the lower time frame. A reaction from the lower time frame POIs. And that's the reason as to why I took that. And right here, you can see price skyrocketed down. I believe there was some news here, but I decided to still hold on the trades, even though that's risky. Right, so right now, you can see we are currently in a new trading range. And right now, yeah, this one. I can't zoom in for bigger candles. All right, no problem. I hope you are seeing the screen. That's the most important thing. Let me just leave it like this. So right here you can see it, everything. All right, that's the high. So let me get rid of this long position tool, short position tool, and you can see now everything is right. So here, where is our inducement? There is no any inducement in this range except our trading range high now will be acting as our inducement, and in this case major inducement. So if I was to take the entry, I would wait for a sweep of the major inducement. So let's see how price actually react. And right, I'm running price, and price is heading up. All right, let me make it fast. All right, price eventually gets down, and you can clearly see right here that price here, you can clearly see that price broke past this low. So this means that this one here is a valid pullback, with this one here being a high of our pullback. So this one here is our major inducement now, and this one here is our external liquidity, or in that case our trading range high. So right now I'll be waiting for price to take out the major inducement, and then if it's a sweep I will take the entry, but if it's just a break I will mark the POIs. Right, so let me continue. All right, price is heading up. Let me reduce the speed of the candles, and right here price is consolidating, probably reacting from the SMT, giving a reaction. All right, will price create a new pullback? Let me make it fast. All right, yeah, sure, I think price will create a new pullback, and exactly right here price creates a new pullback, so meaning we'll be shifting to this one here. The reason is to why that cannot be a valid break of structure. I mean, this one here cannot be a valid break of structure is because price has not yet taken out the inducement. So that's something that you all need to know, that we only confirm a break of structure after the inducement is taken out, and right now this one here is our major inducement. So not until now price creates another pullback, I will only be waiting for price to take out this. All right, so and exactly right here price creates now a pullback here. So now this one here is our major pullback, exactly right here. So right now let me reduce the noise by shifting into the 15 minutes, exactly right here. So you can see I'm just seeing the same thing, it's just that I have shifted to the 15 minute just to reduce the noisy candles. Right, so now let me run price and see what price does. And exactly right here you can see price has taken out the inducement. So this one here is a confirmed low, and right now I mean right now is the right moment to mark the order flows. Right, so on the extreme I can clearly see that this one here is our order flow, and where is our right, so the decisional, it's messy, I can't even identify the decisional right now. All right, I can refine it to this one here, so I can just refine it here. That's the decisional, and the extreme, I mean the engineering liquidity, exactly here this is not a valid pullback, so I'll just be picking this one here, and this one here is our extreme order flow. So right now I'll be waiting for either a sweep of this I mean the sweep of the engineering liquidity, or a mitigation of this extreme, I mean the mitigation of this extreme order flow. So right here, just to not miss this, I mean this entry, I just did this and placed my stop loss above here. You can check all these on my Telegram channel. I placed the entry from this engineering liquidity because I checked at this pullback, it was very big, and I was like, if price sweeps this, there's a high chance that price may end up reacting from it without mitigating the extreme order flow. But just to be safe, I placed my stop loss above there, and I placed my sell limit order exactly at the extreme, I mean exactly as the engineering liquidity. All right, if I was just using the 15 minute, I would have placed my TP at 1:2, but since I'm using the 1 hour, then my TP of course needs to be right here, and you can see this here is the third re-entry. The other entry was right here, was from there, stop loss above here, right somewhere there, and target profit of course down here. It was something 1:5.5, guess, I mean 5, yeah, 5 or 5.5, it was 5.5 I guess, or somewhere there. All right, so 5.5, then right now this here is the re-entry, You can see all of these trades actually, guys. This is exactly how I took the trades. You can even check them on my free Telegram. All right. So exactly right here, price swept this high exactly here as I forecasted, and price headed down, like down and down and down, eventually reaching out to the external liquidity. And you can clearly see this is how exactly I spotted the re-entries. Pretty much easy and clear and logically. So I spotted a 1 is to 5, a 1 is to 5, and a 1. This year it was, I guess, 2.7 for me. Here it's 2.6. All right, that's fine, no problem. It's actually depending on the broker and stuff, because the broker prices are not the same. All right, and this is how I took these trades. And for the top down analysis, I will be uploading a video, or maybe if you're watching after I have already uploaded, you can access it on my video course playlist. And for those who haven't yet joined my free Telegram channel, I will leave the link in the video description. So if you made it to this end, this means that you have learned a lot, and this means also you have been enjoying the video. So drop a like, and I will see you in the next part.